For decades, the most sought-after document in the entire investing world wasn't some hot stock tip or a secret analyst report. Nope, it was a letter, specifically Warren Buffett's annual letter to the shareholders of Berkshire Hathaway. And these letters are just legendary for their clarity, their wit, and their timeless wisdom. So today, we're going to distill decades of that wisdom into your very own owner's manual. I mean, really think about it. What if you could just cut through all the noise, all the jargon, and get the core principles straight from the source? What if he wrote a letter directly to you, laying out the only things you truly need to know? Well, that's exactly what we're aiming for here. We've taken the essential wisdom from his collected essays and boiled it down into a single, straightforward owner's manual. So think of the next few minutes as your own personal lesson from Omaha. Okay, so first things first. To really get a handle on Buffett's solution, you have to understand the problem he sees with the whole financial world. He doesn't see it as a science. He often sees it as a casino, and a casino where the house has made the rules intentionally confusing. Buffett just nails it with this quote. He argues that so much of modern finance is designed to make you feel like you need a special guide, right? A priest who can interpret all the mysteries for you. But he believes the core ideas are actually pretty simple, and all that complexity is really there to benefit the financial industry, not you. And these are the traps they set. People get completely obsessed with the daily up and down of stock prices. They get lost in these incredibly complex formulas. They follow the crowd right off a cliff. And most importantly, they forget what they're actually buying, a piece of a real, living, breathing business. So if that's the problem, what's the solution? Well, it's a simple but really profound shift in your perspective. It's all about trading the mindset of a short-term speculator for the mindset of a long-term owner. At the very heart of his philosophy is one simple rule. It's not about stocks, it's about business. He's not asking, what's the market going to do tomorrow? He's asking, how is this business going to do over the next 10 years? This one idea just reframes everything. You're not buying a stock ticker. You are buying a small piece of a company. You become a silent partner, an owner. Think about it. If you owned the local coffee shop, would you panic and sell it just because some random person on the street shouted a lowball offer at you one morning? Of course not. And that brings us to this crucial difference. The speculator is always asking about the price. What's it going to do next? The owner is always asking about the business. How is it performing? One's a gambler, the other's an investor. And that single distinction changes every single decision you make from here on out. Now, to make this whole owner's mindset thing really stick, Buffett's teacher, the brilliant Benjamin Graham, came up with this powerful little story. It's an allegory about a very peculiar business partner you have to deal with every day. His name is Mr. Market. So just imagine the entire stock market, with all its wild mood swings, is just one guy. Some days this guy is euphoric, totally optimistic about everything. And other days, he's terrified and pessimistic. And he just happens to be your business partner. So every single day, without fail, Mr. Market shows up and yells a price at you. He'll offer to buy your share of the business or sell you his share based on whatever crazy mood he's in that day. The guy never gets tired and he never, ever fails to show up. So what's the secret to dealing with him? It's realizing that Mr. Market is there to serve you, not to guide you. See, when he's panicking and offers you a ridiculously low price, that's your chance to buy. When he's ecstatic and offers you an absurdly high price, you can sell. And on most days, you can just completely ignore him and let the business you own continue to do its thing. You are the one in control. So how do you know? How do you know when Mr. Market is actually offering you a bargain? How do you protect yourself from his craziness and, let's be honest, your own emotions? Well, this brings us to the final and absolutely crucial takeaway. It's a concept called the margin of safety. And it's pretty simple. It just means figuring out what a business is truly worth, its intrinsic value, and then only buying it when Mr. Market offers you a price that's way, way below that value. It's kind of like a suspension bridge engineer's secret. Build a bridge that can hold 30,000 pounds, but then only drive 10,000-pound trucks across it. The margin of safety is all about understanding this fundamental difference. The price is that wildly fluctuating number Mr. Market screams at you. The value is what the business is actually worth. Your entire job is to pay a price that is far, far less than the underlying value. And this famous quote just explains it all perfectly. It tells you why that margin of safety is so powerful. In the short run, yeah, the market is a popularity contest. Mr. Market's moods, his votes, can push prices all over the place. But over the long run, the market has to recognize the actual weight, the true value of the business. Substance always wins out over sentiment, eventually. So there it is, your own personal letter from Omaha. Think like an owner. Use Mr. Market as your servant, not your master. And always, always insist on a margin of safety. You have the manual now. The only question left is, which businesses do you understand well enough to actually go out and use it?